Good evening. This is the first presentation of Byroids Initial Breach. I will be going over how we will trade the BIB and hope you will find this insightful. We have some topics here we will talk about. I will go through a little bit of a background on some basic market concepts. We should talk about these futures contracts, which is what we're trading. Uh, we'll talk about the window that we trade and how to identify this BIB. We will have a little opportunity slide about order flow and how we should be taking our trades in these BIB caps. Next, we will review our action plan on how to mark out this BIB and when we can put a Fibonacci on it. As well, we will go over the entry and targets for price. As well, we will review the stop loss placement for each of these trades and the risk reward for the majority of these trades in the BIB. Finally, we'll do a recap with some examples and show what these trades will look like and end with a little mentality. Let's understand the basics, some things that many of you may already be familiar with. These are candlesticks. In my slide here, the red ones are bearish candles and the green ones are bullish candles. As you see in these examples, there is a gap in this trading where there is no delivery in this area when it's a bullish move or it's a bearish move. We will be trading futures contracts, which are the ES Micro and Mini, or the NQ, as we trade the futures contracts on the S&P 500 and as well as the NASDAQ. Price moves in a tick, which is a quarter index point, or we will refer to handles as one full index point. The price per tick for a micro contracts are only $1.25 US, and for a mini contract it is 10 times that. One handle is $50. So as you probably know, these price swings can be very exciting or put some fear into your heart. The NASDAQ, a much more volatile index, is only 50 cents per tick on a micro contract. But once you go to the mini, it is $5 a tick. We look at $20 US per handle. When you are looking at these contracts for these future markets, we have designations. There's 4. H will be designated for the March contract, whereas June is the M, September is U, and December is the Z. For example, the contract designation ESU24 is a contract for the S&P 500 futures September contract in the year 2024. Or we have an example here of MNQZ24 is a micro contract for the NASDAQ in the December contract. Now it's important to note these contracts do roll over. They expire the 3rd Friday of that contract month. You want to ensure you're trading the contract with the highest volume, and you can easily check barchart.com to see these volume numbers. Be aware that if you are trading equities, that the contract rollover occurs on the Monday. So let's review our trading window. We want to make sure that your charts are set to New York time. That is commonly referred to as the Eastern Standard Time. And we want to make sure that we're always looking for the BIB on the 1 minute time frame. Always the 1 minute time frame. And we are trading after New York Open. If you are using a trading view or maybe some other broker to trade, you can have your real-time hours on, but we want to make sure that we have all the hours on so we are prepared to see what range is occurring before the market open. This initial gap after 9:30 will be where you enter your trades. Now let's identify this BIB. This Byroids Initial Breach occurs after 9:30. It is quite nice to put a vertical line on your chart with 9:30 open so you are prepared when the deadline approaches. You can take the high of the candle before the gap and the low of the candle after the gap, and this is your initial breach. Another example of a breach on the NASDAQ on some bearish order flow would be after 9:30 open. You have your marks from the low of the candle before the gap and the line right after the formation of that gap. Now let's understand some more basics. Order flow is bullish or bearish. If we have bullish order flow, which is green up close candles closing over a red candle, and we are making new highs but leaves this gap behind, we have a buy side imbalance in the trading. Now when we are looking to take a trade in a green candle, we will be going long, whereas if we have this bearish order flow where price is going down, we have an imbalance to the sell side of the curve, and we will be looking to short in this BIB. Now let's map out this trade with our action plan. As you see here, we extended a BIB area for this gap after 9:30 and put a Fibonacci. Remember to mark your BIB and throw the Fib. This is done in the direction of the order flow to present potential targets. Don't forget to go with the flow. We're longing in the buy side imbalance and shorting in the sell side imbalance. We should talk about our order entry now. So, and you will set your buy or sell orders at 50% of the BIB range. I think as you trade this technique more frequently, you can become comfortable putting orders at the 25% level or the 50% level or the 75% level. As you see in this trade specifically, price came to this 25% level and hit your first target, but it did not really get your second target before it came back down. Now, we waited for price to come down to our 50% level here. We have shown the risk reward for this trade to be about 3.75 if you are targeting the -2 level of your Fibonacci. Here in the NASDAQ, things are a little bit more volatile and price moves greater, so you can target 20 to 40 handles in the NASDAQ for your first 2 target points versus only 5 to 10 for ES. Now you see sometimes, as I will show in examples, where you will use handle targets or you will use Fibonacci levels. Now let's move on. It is always important to protect your capital. With such a good bib here, a long bib, we have our targets at the -2 point. We will put the stop loss at the low of our candle wick. This ensures that if price returns into this bib before it hits your targets, you are protected, in addition to limiting your loss of capital. If this trade were to go against you, you are only looking at a 5 less than 5, that 5 stop. That would be 5 handles in ES, which is only a loss of $750. Whereas if you hit your targets, you will net almost $2,000 US. Now, as we are hitting our targets, we can move this stop loss to break even after our first target is hit. Remember, protecting your capital is most important. Now, let's see some of these movements, the BIB in action. In our first example, we have a small BIB. So what we used are handles as targets versus these Fibonacci. We put a limit order for 2 mini contracts at the 50% level of this BIB. Our order was filled just 2 minutes after the creation of this BIB. Now, it's important to make sure your stop loss is placed. It should be at the bottom of this candle, but that was a misplacement on TradingView for this example. After 4 minutes, our price went and hit our target. We moved our stop loss to break even to protect our remaining capital. In this example, we were stopped out. We netted $250 and we only experienced 1 tick of drawdown, so there would be no fear to hold this trade. In our next example, we have a much larger BIB. As you can see, the Fibonacci levels are above the 20 or 40 handles that we target when using that method. We placed our entry at the 50% level. Our drawdown on this trade was only 8.75 handles with 3 micro contracts, about $52. Not a lot of money to fret if you're only using micro contracts. Now, we see our first target was hit in 4 minutes, and we moved our stop loss to break even after another 4 minutes in this trade. Our stop loss was moved to the top of the BIB, and then we hit our third target. It's a beautiful example of a BIB trade. Our gain for this trade would be $363, showing that even using micro contracts can be profitable. Here is a third example of a trade I took just a day ago. We took 3 mini NQ contracts short. As you see, we had a sell side candle that we shorted. We put our longs at 50% and experienced only a few handles of drawdown before price quickly went in the direction of our targets. In just under a minute, we hit our first target and then quickly hit our second target. In this specific instance, price was moving so fast I could not set a limit order, so I market bought near where these target prices were. We hit our third target after just mere 3 minutes in this trade for a net gain of over $3,000. As you can see from my clips from Ninja Trader. I had experienced a loss overnight, and we went profitable with just this one trade. Here is a fourth example. While the BIB is a technique that occurs every day and it hits at a remarkable rate, there are some instances where you will not be able to get into trade. And this is okay, because if you don't trade, you don't lose. Protect your capital. As you see, we put a limit order for 3 micro contracts. These were smaller trades because it's a smaller bib. We used our handles. We were targeting 20 and 40 and 60 handles, which, if the trade was taken based just solely on getting into the bib, we would have been successful. But because we did not actually experience this trade, there's no sense in projecting income. Price reached into the bid but did not trade, hit the 50% mark, so we did not trade. As stated previously, as you become more comfortable with the BIB, you can use these other Fibonacci levels for entry points. As you see with NQ, our initial stop loss is put at the body as opposed to the wick, and this is done because if our price goes through this bib, then we want to limit our loss. As you will see and backtest on your own, you will notice that when price comes into this bib, initially it almost always rejects right away. This is why the bib is such a great tool. This Byroids Initial Breach forms always on the 1 minute chart and always after the first gap opens in the New York time, Eastern Standard Time, to make sure you are in sync with these markets. Now you want to make sure you don't use the gap from 9:30 candle always after 9:30. Make sure you go with the flow. If you are in a bullish gap, your orders will be long, and if it's a bearish gap, your orders will be short. If you are presented with a small bib, use handle targets for your target prices, and if you have a large bib, drop that fib. Let's talk about mentality. Make sure you know who you are and what your intentions are in a trade. And when you know that and you know the bib, you will be successful. Patience is key. Do not forget that every day the bib is there for you. There's no need to rush. Many of these trades occur very shortly after open and last very short amount of time. Remember, the price always comes to the bib, and if it leaves you behind, do not worry. The bib shows up every day. Don't forget to protect your capital. This is important. Always set your stop loss. And never forget that the fear of loss is more powerful than the promise of gain. This is what leads to fear of missing out, or as some people say, FOMO. Don't let this fear grip you. The bib is every day. And don't chase your losses. As you see with our stop loss placements, losses are low and rewards are very high. Thank you for learning about this bib and Byroids Initial Breach, and good trading to you.